Your digital twin just applied for a loan. It's 3 a.m. You're sound asleep, but your digital twin just woke up. It has analyzed years of financial choices, late-night searches, spending patterns, and habits you didn't even realize you had. And it just applied for a mortgage on a house you've never even seen. Sounds like science fiction, right? Not tomorrow. But the building blocks already exist today. In this episode, we're going to break down how this could happen, why companies are moving in this direction, and why it may completely change how you think about money, identity, and control. So, what exactly is a digital twin? At its core, a digital twin is a virtual model of something in the real world. The idea has been around for decades. During the Apollo era, engineers relied on highly detailed simulations to understand and solve problems before making decisions in the real world. Later, the concept evolved into what became known as digital twins. Today, companies already use digital twins in surprising ways. Energy companies simulate wind farms to improve output. Entire cities, like Singapore's virtual Singapore project, use digital models to study traffic flow, construction planning, and infrastructure. These aren't static copies. They constantly update using new information and become increasingly accurate over time. Now imagine applying that same idea to a person. Instead of sensors and machines, the inputs become your banking activity, purchasing behavior, browsing habits, location patterns, subscriptions, investments, and financial decisions. An AI system builds a living model of you, not to replace you, to predict you. Some researchers already describe versions of this idea as financial digital twins, AI systems designed to simulate and forecast financial behavior before decisions are made. So let's go back to that 3 a.m. mortgage. How could that actually happen? The answer is something called Agentic AI. Unlike traditional AI that only responds when asked, agentic systems can take actions on your behalf. But first, you hand over authority. You might set rules like, find me the best mortgage available, refinance if rates drop below a certain point, move idle cash into higher yield options. Your AI twin continuously watches your financial profile and market conditions. It notices you've been browsing neighborhoods. It knows your savings patterns. It sees that your income history and credit profile match your stated goals. Then it finds an offer that meets conditions you already approved. Application submitted. Documents prepared. Pre-approval requested. No midnight phone call, no forms, just action. And here's the part that may matter most. Most people won't adopt digital twins because they want autonomy. They'll adopt them because convenience wins. One day your bank may simply offer a button, enable financial autopilot. Of course, for any of this to become reality, major guardrails would need to exist. Today, AI has no legal personhood. Your twin cannot legally sign a contract. You remain responsible. That means entirely new systems for identity verification, consent, liability, and authorization would have to emerge before this becomes mainstream. The upside is enormous. Imagine an AI that pays bills at exactly the right time to optimize cash flow, negotiates lower insurance rates, moves money automatically, rebalances retirement accounts during market swings. For millions of people, financial optimization could become invisible. But every advantage comes with equal risk, because the same data that makes the twin powerful also makes it dangerous. What happens if someone gains access? They wouldn't just steal information. They could operate as you, apply for loans, move money, build obligations, damage your reputation. Then there's bias. If these systems learn from historical financial decisions, they could quietly reinforce existing inequalities. And then comes the black box problem. If your digital twin gets denied credit, will you know why? Or will the answer come from a machine nobody fully understands? These are no longer technical questions. They are questions about privacy, consent, accountability, and ultimately control. We're approaching a future where the line between our physical and digital selves becomes harder to see. The convenience is tempting. The risks are real. So what do you think? Would you trust a digital version of yourself to manage your financial life? If you're enjoying this exploration into our digital future, please like and subscribe for more. The rise of personal digital twins isn't just another technology story. It's a philosophical shift. If an AI version of you can act in the economy, build wealth, make decisions, and represent your interests. Then what exactly remains uniquely human? The biggest challenge may not be building these systems. It may be deciding how much of ourselves we are willing to hand over, because our digital ghosts may not stay ghosts forever.